Tesla's Robotaxi service is now live in California, starting in Oakland, San Francisco, and San Jose. It's launching with supervised drivers, but here's a shocker, just $1 per mile with a $1 base fare. That pricing could crush Uber, Lyft, and Waymo fast. And it's not stopping in California. Tesla's hiring autopilot vehicle operators across the U.S. from New York to Texas to Florida. The strategy is clear. Get ride-hailing up and running in as many cities as possible and let the regulators catch up. This is Tesla's Autonomy Playbook in action. We've got the Bulls here with us today. We've got Jeff Lutz, also known as Mr. Incredible, the Rationable, and Tesla Boomer Mama, the Queen, Alexandra Mertz, the Power Bull. Welcome both. Thank you for joining us.
Hey, Herbert.
This is the story we've been waiting for. It's starting to play out. I think now we've got a clearer strategy what's happening. They're rolling out ride-hailing first, and they're going to go wide. This weekend, of course, was California. Jeff, I know you've had some thoughts about this. We've all been talking about this. Remember, we were predicting what would happen a year ago. I think there's portions of what you guys predicted, and there's a bit of what I predicted as well. So we'll iron that out today. Jeff, what you're thinking about the strategy that they're doing? Company and the product. I don't look at the quarterly stock movement.
A very realistic bull, questioning certain decisions.
The rational bull. They enjoy listening to bears.
Looking for the red flags. You're supposed to react.
I think it's a smart strategy, actually, when you're launching a safety critical type service like this. To me, this seems like a very valid approach to get to scale quickly, get to scale safely. And it looks like this is something that could grow rather quickly. So I was looking back at posts, I think it was July a year ago. I was like, why not just do this? The other thing, I think Tesla must be seeing something in their data in terms of performance of the vehicle and what they're seeing in terms of interventions that tells them that to trigger all of this hiring in the background and just keep things moving rapidly. Finally, I think the approach in the Bay Area in California is to have such a large area that you can get to those 50,000 miles pretty quickly that's needed for the regulators.
Yeah, this is what we're going to cover today. We're going to talk Robotaxi. We'll spend as much time on that. If we have time, we'll talk about the strategic moves that Elon seems to be making, things that are way ahead of years. He's locking down supplies is important. And if we have time, we'll talk about XAI as well. Alexandra did a lot of good research on that. And of course, quick fire questions. What we're talking about right now is Robotaxi. This came on my Robotaxi app just this week, a few days ago. Rides are now available in Bay Area. Short rides cost less with dynamic pricing. This is the new geography that's available from San Francisco, Oakland, San Jose. It's pretty large. The blue areas where Waymo's currently offering their service. And in fact, this one down here is limited. It's not even to regular customers quite yet, but you can see where they're going. And this is where Austin compares. This is a much bigger area than normal. And then the pricing, it's now much more clear that it's $1 base fare and then $1 per mile. So here's a 4.51 miles trip, $5.51, $7.91, $8.91. But we also figured out that there is this, it seems to be, I don't know if you guys saw this, but there was actually a surge pricing, so that at midnight, it's priced differently. Sorry, I'm jumping around here. Here, this one is at nighttime, and here it's $2 per mile, but it's still much cheaper than Uber X, Uber XL, Wait and Save. These guys are in big trouble if this is what happens. And if you're comparing it apple to apples, you're not going to compare it to the Wait and Save model as well. And then I think the big news is that all these vehicle operator autopilot job post openings is everywhere. Houston, Tampa, Florida, Miami, Brooklyn, New York. That's a surprise to me. Unbelievable that they would even think of Brooklyn because of the snow that they're going to come in December. Henderson, Nevada, Palo Alto, California. This is Farmers Branch near Dallas. This is everywhere they're opening up. So Alexandra, what's your thinking about their strategy, their pricing, their approach? Yeah.
He may as well prove us wrong, because remember, in the earnings call, he said by the end of the year, half of the US population should be covered. And I was like, there's no way. I take the under.
Yeah.
Who would have thought that New York could be part of it? Who would have thought that Dallas could be part of it? So if you really go, and we're just now beginning of August. So who would have thought that they may already be there at this point? And if the strategy is to have in those states where you need a driver for a minimum number of miles driven, well, be it, may as well start, right? The quicker you get these miles in and the quicker you get those permits in, the quicker we're going to rock and roll. So fine with me. I don't want to jinx anything, but isn't it wonderful? We didn't have any major accidents so far. They are overly prudent, which I appreciate, but we have these two situations: being overly prudent, having a very good track record so far, and at the same time now going bigger. And we'll see how many of these cities will start initially with a safety driver rather than a safety monitor. But it really doesn't matter. It really doesn't matter as long as we're getting there. So be my guest. If we get to half the US population by end of the year, I'll be the first one surprised and eat my hat, but it'll be good.
Yeah, when you said it doesn't matter, though, I mean, I see all these posts that people are replying going, you're being too bullish and you're pumping the stock. This is nothing. All this is just a driver still in the car. This is basically ride hailing only. And of course, Tesla has to call it ride hailing, and it means nothing. But people are not realizing that the reason, first of all, any vendor who wants to launch in California has to do this. You have to have a driver in the car. They have to collect, I think, 50,000 miles before they can move on to the next stage. And so what's the fastest way? Make it very large, get I don't know how many cars, get as many drivers, get that in your place so you can move to the next step. But you also, it's supervised, but you're not touching the wheel. The thing is doing itself. So they already know that the statistics, because we've got all of our cars doing this, and this is going to be using the Robotaxi app, right? The Robotaxi version of the FSD. So that people are saying this is nothing, and I'm like, what? This is it's step one on the way.
And don't compare it only to Uber. When there is an Uber driver, the Uber driver, by entering into the Uber network, is under Uber's permits and authorizations and way of operating, right? So what Tesla received, and we talked about that a couple of months ago, was in California, the TCP, Tourist Carrier Permit. That is, you will see that on buses picking up people at the airport or people doing wine touring buses, whatever. All these cars, all these limousines, they need tourist carrier permits. So this is now a Tesla network. This is not like a Tesla in the Uber network. This is a Tesla in its own TCP network. So it's not the same. It is different in the way that there is nobody between the Tesla and the legislator. It is only between Tesla and the legislator. And so yes, we need to get to those 50,000 miles under this TCP to get to the next one. The quicker we're there, the better it is. But it is a real step forward from an Uber driver using a Tesla. It's not comparable.
Do you guys? So you think it's obviously different. What do you guys think about the strategy, though, to go ride hail as multiple cities? I don't know how quickly that they'll expand, but they've implemented 3 cities here in California. So if they can do this large of a geography in California, they can do any city at this point.
Herbert, you know it because you drive it. Jeff knows it because he drives an FSD. I know it because I drive an FSD, and we don't even have that version yet, right? Yeah. So
it's flawless. Yeah.
Once it works, it works, and that's the whole beauty of it. And that's the moment we've been waiting all for such a long time. It is not geofenced. It is not mapped. It is working now. Will it work flawlessly all the time? We don't know. Do they get to a comfort level with their Austin data? Obviously, they are getting to a comfort level where they feel they can turn the switch. And turning the switch with a safety driver is probably easier for them, plus the obligation to fill those 50,000 miles. But it is evident that once it works, it will work everywhere.
Yeah.
Yeah, we're comparing. The comparisons are interesting because sometimes we see another robotaxi service and they're running into each other, they're having a problem, or they're blocking an intersection. But they have a couple thousand cars out, so the probability of failure is going to be up in that situation. At the same time, we're already starting to see this early pricing from Tesla, and Tesla is not a company that's known to put product out to eat, quote unquote, eat financials. They don't do that. That's why when you see the new vehicle launches, they're priced very high. That's why a Cyberbeast was 130,000, and now it's much less. The Cybertruck, also much less. The all-wheel drive. They don't they're not known to just eat costs. So what I actually think we're seeing here is something we've talked about a lot on this show, which is the underlying cost structure, the design of the robotaxi cost structure relative to the design of existing services out there. It is such a big jump in terms of what Tesla has done that they could start at I believe they're starting at these lower prices. Tesla is a robotaxi service that is not at scale. It is clearly not at scale. Just a few dozen vehicles out there, and look at the pricing. The other services, ride hailing and robotaxi, they are at some level of scale. And so now that's another example of comparing two different groups at two different phases of their lifetime. But I think what it's telling us is that the underlying unit economics of the Tesla robotaxi network robotaxi service is going to get meaningfully lower from where it is today. And it can already start in an unscaled manner at a much lower cost. That's, I think, very powerful.
Is the dollar base fare and the dollar per mile during the day, and I think it could be $2 per mile during the night, is that covering the cost of the human driver?
I mean, we could do so. I mean, we could run some models to try to understand it. The point is, the only assertion I'm making is Tesla is not a company that's known to just give stuff away. They don't. Mm-hmm. They don't do that, and they find ways in their approach to product launch, whether it's a launch series where they put FSD, put all these different things. They're not known to give stuff away like this they could. So there could be some level of them covering it, but I think the thesis is going to be proved true that the unit economics are so much meaningfully lower in what they're doing that this is just the beginning of what we're seeing.
And then do you think
this? Excuse me. Do you think this formula of $1 base fee, $1 plus mile, is something that just sticks and they feel they cover their cost at this level? Oh my God! That
was my question. Brother. Will it stay that price once they remove the driver?
No. So first off, I don't think there's a market element to pricing, and then there's your own underlying cost structure element to pricing. Yeah. So I think those two are going to have to. So I think you're going to see if Tesla goes meaningfully lower, the others are going to have to start going lower as well. And we saw what happened in EV world when that happened. So yeah, so I think there's two elements at play. I don't know. We'll have to see. I think there could be a number of things going on here, but they have such a low volume of cars, so they could be covering some of it. But again, like Tesla does not have a history. They don't give stuff away.
Yeah, for sure not. But the other thing is, I do believe there has to be some dynamics of pricing, right? We saw it a little bit now with higher rates at night.
Yes.
There will be higher rates at certain peak hours. There will be higher rates. I don't think they're just going to be, a standard formula, and that's everywhere. And on top of it, if the standard formula would be $1 per mile plus a base dollar, I mean, the others can just close. That's the end of everything else.
I think this is it. I think $1 per mile with $1 base fare could be the pricing, and it's still dynamic. I'm not saying it doesn't change during busy periods during nighttime, but having that idea that during regular times, $1 per mile is so easy for people to just understand what the price is going to be, and then it's enough, like you were saying, that Uber, Lyft, and Waymo, it's already enough. They don't, and it's not their job to try to get rid of the other guys, but it's their job to offer something that's make them a lot of money. And CERN put together this beautiful graph here showing how much money at $1 per mile, if the robotaxi is utilized 30% of the time, and you can see the range here. What if it's utilized 65%? But if it's utilized 30% of the time, Tesla will make $48,000 as revenue per vehicle per year. That's his calculation. And then profit wise, it would be a 36% margin and $17,000 in profit per vehicle per year if they just do the dollar per mile. So that's his estimate. You've got to go find out if you think his assumptions are correct, but it's pretty lucrative.
And if I could read that, so from the last earnings call, Emmanuel Rosner asked the cost per mile on Robotaxi, and Elon said, well, the Cybercab, which is really optimized for autonomy, that I think has got probably sub 0.30 per mile, potentially over time, maybe 0.25. It's really like if you design a car from scratch to be a cost optimized robotic taxi like Cybercab, like for example, we're not trying to make it cornering like incredibly well the Model 3 would, or the Model S would, or the Model Y, well, you get to these type of prices. So, I mean, obviously they're not there for a Model Y today, but if your end goal is 0.25 and you've become in the mind of every user a $1 per mile service, that is a nice margin.
So, but somebody was saying to me that 25 cents or 30 cents per mile, that doesn't include the cost of the vehicle.
Well, you
but
mean
regardless.
the amortization of the vehicle?
Right. Yeah.
Because I mean, I do believe that's the price that it will cost
It's
for
all in?
Tesla to operate it. Yes, I do. For
All in.
Tesla to operate it, yeah.
Amortization, insurance, maintenance, all in, and the cost of the vehicle, of course, amortization.
For
So
Tesla
you think
to
that?
operate it, yes.
Okay. And some people, but my point is, even if you doubled it, it's okay, right? It's $1 per mile, still making money. So I think the panel here, we all think that Uber, Lyft, and Waymo, is Waymo dead? I mean, they'll keep funding it, or will all of them? How will they respond in let's say
No,
here?
I feel actually
in San
Waymo
Francisco?
can't give up now. I feel Waymo has sort of this obligation to coexist, which, as a Tesla shareholder, we should all encourage. We don't want to be monopolistic here. So, and I do think obviously Google has all the money they need to throw at it. But for Uber and Lyft, it's going to be a steep hill, because either they go autonomous, but then there is hardly any margin for them to be made. Maybe they just buy their own.
It's not autonomous yet for Tesla, so they just need to do a price war and eat it in San Francisco. They'll probably do that, right?
Yeah, but there's only so much money they can make.
This is just getting started, and Tesla is going to have some period of time to get to break even and then be accretive. So I don't view this, again, I don't view this pricing as like they're making money on already. I think they're making revenue clearly, but in terms of it being getting to break even, I think it's going to take a larger amount of vehicles, larger amount of service area, a larger amount of time. But I think Tesla will get to break even faster than the other services. The other services may not have even gotten to break even, at least on ride hailing versus not. So yeah, it's to me, it's gonna play out over a period of time. There's not going to only be one winner. I don't believe that to be the case. But there are other industries where you have multiple players, but you have a player that has a large predominant portion of the margin share of a category. But the other players can exist because they've built an underlying cost model that allows them to operate on 5 to 10% margins. That's great. But there could be somebody else in there that just consistently runs at 30 to 40 to 50% or more margins. And you could just have that situation where they coexist, but all the money's going in one direction.
So I have a question, Jeff. So I think we can all agree Tesla will win the margin war, but will they also win the quantity of cars in the road war?
Yeah.
Yes.
Yep. Yes.
See? That's what I think.
What do you guys think is going to happen here in California in the near term? Are they launching with 20 cars? Or are they going to launch with 100 cars? Like what is it today, which we don't know, but it's still invite only. It's still invite only. So they only will just do a small bit and then maybe 2 months. How quickly will they launch this?
Herbert, I mean, how many miles can a robotaxi do per day? 1,000?
Well,
I don't know.
I think one of the things that we were all very disappointed with, a number of people, when earnings called, they all said that in Austin they only did 7,000 miles.
Yeah, but Austin, did you see the radius of the Austin fleet compared to what we have in the
That's
Bay
one of
Area?
the
But
reasons
let's
why I
say
think that
100.
they did it so big. Yeah, they did it
Yeah,
so
let's
big
just
so
say
that they didn't get
100.
as
But
many.
so if you have one car 100 miles and you need to get to 50,000, you need either 500 days or you need multiple cars to get it down. So if you have
That's right.
20 cars, it's 25 days. So you get to these 50,000 very quickly.
Yes, that's what I think they're going to do. So I think that in California they're going to launch with more because it is supervised FSD. So
Yeah, 50 cars, 100 miles a day. You're there in 10 days. So
Yeah.
I mean, Alexandra, you described it correctly in Herbert as well. I think they're starting rideshare. I think they're going to do qualifications. I mean, we still don't have this federal autonomous framework, so they're going to have to do qualifications state by state, and that's what they're doing.
yeah. So you see these hiring of autopilot vehicle operators across the U.S. How
Yep.
soon do you think that means that they'll launch a ride-hailing service there? Months?
Very soon. No, very soon. Because I mean, we saw the ads for the Bay Area, two or 3 weeks ago. So this is, I mean, how difficult is it to be a safety monitor or a safety driver?
Yeah, it's anybody and everybody almost. Yeah.
Well, and the other thing, this is not super high skilled. And the other thing that Tesla has this advantage is they have service centers and vehicle delivery centers all in these areas. So they have a home base for these people to go to train, to get parts if their cars need service. Like this is kind of the thing that's kind of sleeping in the background that I just don't think people are taking into account, that others that think they're going to come in and launch a nationwide network, like they don't have the footprint that Tesla has in new vehicle production per day, the delivery centers, the service centers, the parts network. I mean, there's a lot that goes into this, and there's a lot that goes into the underlying cost structure that Tesla will be able to leverage.
Yeah, Waymo partnered with Avis in Dallas.
And remember, I think you weren't there, Jeff, on Tuesday when we had the space with Larry. He pointed out to a study that I think ARK Invest did, where they compared to how quickly Waymo could scale in Austin to cover all of Austin. If Austin would just turn now from one day to the other to robotaxi only, and how quickly it will take Tesla. Tesla having 300,000 cars available is a couple of weeks. Waymo having 300,000 cars equipped is years. I mean, I can't even measure it. And the availability of cars, plus the fact, obviously, that at one point Tesla owners can join the network, is a major advantage on top of everything else.
So that's one thing I wanted to ask you guys, because I saw a lot of X conversations going around. Some people are actually thinking that this means you should just be able to allow customers like us, people who own our own Teslas, to put it in. Everything I've heard from Tesla so far has said that they're not going to do that until second half of next year. Elon just said that a few weeks ago. And yet that conversation is happening that, okay, since you're going to do supervised drivers, why not let me take my car, put it into California, let me be the supervised driver, and I get a share, whatever it is. But I don't know why people are thinking that. I guess they're wishing that. What's your opinion on this idea?
I think there are two steps to this. The first one is to be fully unsupervised. And Elon said that may happen end of this year, more probably in 2026, right? So the fact that, and it probably will roll out by state, and he mentioned California being one of the first ones. So the fact that you are in your own Tesla and can read a book or can sit in the back seat and the car drives. So I think that is obviously imperative, and we need then at least a couple of weeks, if not short months, of validation that this works before you let these cars enter the network. The second thing is that these cars need to be checked before they get into the network, because there's an insurance question. Who, from that moment onwards, insures what? When you use it for yourself personally, maybe you continue being the one insured. When you put it in a network, is it Tesla covering it? So before that happens, there has to be a technical checkup of every car that they will let enter. You could have modified it.
Right.
You could have, I don't know
think
what.
I don't know if you understood my question.
Oh,
What I'm asking is, people are saying, because it's a ride-hail service, Uber, why not just let me use my car in California and let me be the supervised driver, like an Uber driver?
well, because you don't have the TCP license for that car. TCP is given to Tesla for Tesla cars, not for Tesla owners' cars.
Okay. So that could be a regulatory issue right there. So they can't do that.
You can go under
Elon,
the Uber.
yeah.
You can get into the Uber system to do that, but you can't become yet a Tesla ride-hailing hat organization. I don't know how to call it, but you see what I mean.
Yep. Good answer. I didn't know that.
Well,
that's
California.
Point, everything.
That's California. I mean, if I were Tesla and I'm having some sort of difficulty ramping up drivers, look at the data they have. Anybody that's in Tesla insurance, they know their driving score. They could go to each of these cities where they have a targeted launch, Henderson, Nevada, and say, give me 100 Tesla drivers that have a driving score greater than 97. And they could reach out to those people and say, do you have any interest in doing this? They just have an unbelievable, and by the way, they could just knock out anybody that has poor driving scores. They just have an unbelievable set of data. So it could be something they rely on. But I think the primary path is to get a subset of drivers to get whatever qualification miles are needed. But as the overall driving system improves, the idea would be to pull them out as quickly as possible. But I think Tesla has this data, so they can ultimately make the decision. But I think it's a viable option. Like I said, launch nationwide with a driver in. Why not?
Yeah, but using that driver's car,
No,
yes.
using Tesla cars.
Well, staff that way via using Tesla cars if you can. But if you you run into a constraint, I would at least be trying to understand what would be involved to be able to do that if I were Tesla. Yeah.
I don't think it's happening. I think, Elon said we haven't been thinking about it. And then Ashok replied saying, yeah, there's a lot that need to be, we need to figure out the tire tread as an example to make sure that it's safe.
I think we're talking about two different things. We're talking about a car entering the Robotaxi network unsupervised, like one of our cars. Yeah, I think there's a large barrier there. But a car entering the Robotaxi network that's being supervised, I think there's barriers, but I think they're smaller and they're more manageable.
Yeah.
But that's why he answered. I think that's why he answered, we have to solve unsupervised with our own vehicles, because I think that is the primary target.
Mm-hmm. Yeah.
Which I did answer, but not to your question.
Yes. Yeah. Answer the second question. How long before we do get to unsupervised driving, unsupervised ride, Robotaxi in California? You guys thinking a year from now? Could be, because just the way the stages work.
I think he answered that. I think he answered that by end of the year. Let me go back.
No. I'm saying Robotaxi in California without supervised drivers anymore. When will they drop supervised drivers? Well, how about this? When are they going to drop supervised drivers in Austin?
You mean monitors?
Yeah, sorry. Yeah.
I think that's going to come sooner than later.
It's going to be based on data, and it's data that we don't see right now. I think the signs to be looking for is, are they putting more vehicles out? Because that tells you that they're getting more comfortable. And because the probability of failure doesn't change as much as you just change service area. The probability of failure, the dominant variable probably is the number of vehicles. So when you start seeing them meaningfully increase the vehicle size, supervised will tell you that, or so the safety. It's not supervised actually. It's just a safety driver in the seat. They can't steer the vehicle or actively do anything. I guess the short answer to your question is if you see them put a meaningful amount of vehicles out there, that tells you that they've now gone to another stage of comfort, and they're just one step closer.
They haven't done that yet. They haven't done that yet. Still kind of staying to invite only. I think there's people tracking the license plate numbers, and they say it's increased, but I don't think it's jumped. Like it hasn't doubled to 20 or anything like that.
No. But I was just thinking about this story about the usage of tires, because I've given back at least 4 Teslas that I leased and came at the end of their lease. And that's one thing that they don't have data on, right? You still need to do that stupid test where you put some money into the tire to send them a picture, and then they determine that. So I think in the future that's actually quite astonishing that we still have, this manual control of tires that will be necessary. Because if there is everybody in the fleet, of course you check them before they can enter the fleet, but then how do you measure how the tire? I can tell you very clearly that my 22-year-old son uses tires 3 times quicker than I do. I wonder why. So there's obviously an element that Tesla can't have data on precisely at any moment. That's funny. I didn't even think about that one until now.
Okay. So now we know, or we have a high suspicion that the way they're going to roll this out is ride-hail service here in California. I say here, but in California. Then they're going to do ride-hail service as they're hiring all these autopilot drivers in all these cities. What's that going to do with the stock? Are people going to, well, they clearly discounted the ride-hail service in California. The stock fell the next day. So nobody cares. Yeah, it's just ride-hail. It's just supervised drivers, not a big deal. But they launched this in multiple cities. Nothing until the day that they remove the supervised driver. What do you guys forecast?
Short-term stock predictions, I'm really not good at. But one thing I clearly see in the market at the moment is that there are some other rising stars, right? We just had earnings from Apple and from Amazon and from Microsoft and from Meta, and so people are currently in the mood for some other Max 7s and seem to divest from Tesla, or at least don't seem as hot, or don't see the same potential. For a long-term stock holder, it doesn't matter at all, because this is just a delay. But that makes it really difficult, especially in these times, right, where we have so many AI initiatives of different levels, some language-based, and obviously in the real world, there's only Tesla in my view, but at least in the mega caps. But it's difficult to appreciate which one has, the sexiest stock return in the short term, and where people flock to. Is it continue to be Nvidia? Is it now suddenly Microsoft? Is it, and that's just something. I mean, I don't care, because I hold my stock and that's it, and I believe in my stock. But if you have a portfolio of multiple stocks, that may be interesting for you. Or if you're one of those that just runs after the latest winner, well, you may be busy without the stock at the moment.
Yeah, same thing. Just on the short term, there's so many things that could that influence price action. I don't think the markets are putting anything that's got auto next to it right now is under some amount of duress, given what's happening with interest rates. And quite frankly, all the Q2 earnings reports from auto have been real problematic. Now, if you look at the multiple that Tesla is getting, Tesla is definitely getting credit for autonomy. The stock price would be much lower without it. So the question is I think there's going to need to be some appreciable scale in terms of this rollout. I think we're starting to see the early signs of that, with the first and the second city coming on pretty quickly. But there are limitations to this service the way it is right now. But I just think the volume of cars, volume of service area, volume of rides given, miles given, when that really starts spreading out and becoming apparent, I think the market will even give it some more credit. Finally, Tesla had mixed news. And the earnings weren't so great, and then everything was kind of beaten down going forward, except Robotaxi. But Optimus, had some marks on it, and the auto business will probably have a really good Q3, but beyond that, could have a couple of tough quarters. So I think there was a bit of mixed messaging, but I think Tesla came out of that actually okay. So it's hard to predict things like this short term. I agree with with Alexandra, but I think if you see a significant volume of Robotaxi increasing, I don't think the market's going to ignore that. I don't.
Well, we'll see. I think they're currently ignoring still energy in China. We had some good news out of energy in China this week as well. And at the moment, nothing seems to be good enough for Tesla. But we've been in these sideways trends so many times. I mean, I'm even bored of commenting on it. And this is clearly a sideways trend. And I mean, you asked me where we'll be at the end of 2026. I think we're going to be significantly higher than where we're now. But you asked me for the next 3 to 6 months, I would not know.
Right. Except that where I'm thinking is that, okay, in Austin, it is a safety monitor. Just think about that. Now, it's only 11 cars, but still, for about a month and a bit now, these cars have been driving in that small geofenced area, right? Safety monitor. So it's not that hard to carry it forward that maybe 3 months from now, maybe 4 months from now, that they can remove the safety monitor. And you truly have a robotaxi, okay? Now, but then people say, oh, that's just like Waymo. Waymo's already been doing this. Then you carry forward and going, okay, well, look at these cars being driven, driving everywhere, robotaxi in all these states by this point, maybe 3 states, maybe 4 different cities. That could make the big difference right there once they remove the safety monitor. Or, yeah, maybe it's another one of those slow things. Everybody will just keep saying, yeah, but.
I mean, there are a lot of things going to happen in the next 6 months for Tesla stock. On the governance side, we probably see the new compensation package. We will probably have the news from Delaware whether that old compensation package is finally approved. So on the governance side, there is hope for upside. I don't think there is much risk on the downside because all the bad stuff is already in the stock price. On the execution side, I think energy, both in the US and in Shanghai, are going to only go stronger. I mean, this is a business with a 30% profit margin and growing every day and every week. So on that side, I'm not worried. I agree with Jeff. Q3 will probably be fantastic. And Q4 will probably be difficult, but Q4 should also see the more affordable car. We didn't address that, by the way. We saw pictures this weekend. Do we believe these pictures? Do we think that is it or do we not? So we'll have to see. But also remember, they were supposed to give us models. So that is not the only thing. There is something else coming. So Q4 could be interesting. That would also move the stock. So I think there are stock movers other than robotaxi income. But robotaxi income could very well be one. But I just believe by the way, the prudence they're making this, and let's remember how we were ourselves. The fact that Waymo announces to include Atlanta, did that move you? Did you have the feeling that, wow, that's something new? I mean, obviously, when it's Tesla, we're very excited about it. And we love that the areas are bigger. But we also have to understand we're competing against so much news and so many other companies who all want that people invest in their stock that, it's important to us whether there's a safety monitor in there or not, but I don't think that is going to move the stock. Now, again, I do believe there's a couple of stuff that could move the stock in the next 6 months, but when, how, I wish I would know.
Yeah, I think the Elon compensation package is critical over the next several months. I think the new vehicles, for whatever, the easiest thing for analysts to do is count cars. And when they see new models and they like what they all, but by the way, they all think they're auto design product experts. A lot of them do. And they're not, by the way. None of them proclaim to be supply chain experts, by the way, but they all are apparently product management experts in the auto industry. We just didn't know it, by the way. It's not in any of their bios or anything, but that's an easy thing for them to look at. And so they will respond favorably. But I actually think there's a good fair amount of analysts. The earnings weren't that great and there wasn't this flood of downgrades. Everybody's kind of looking ahead. Some were upgrading. I actually think most of the analysts are starting to get what's happening here. And Tesla, again, is getting a fair amount of slack in terms of how it's being coverage relative to its earnings power at this point. I just think we should be very upfront with that. And the only quick thing I would say on energy, I agree with the I think China is off to the races. I'm a little bit concerned about U.S. battery supply and how does this all come together? I trust the Tesla team is figuring this out. It's just a really tough challenge with what's going on with the foreign entity concerns, the tariffs that are ratcheting up, and so I think there's something there to contend with. But yeah, I know we've got some other things to get to, Herbert, in terms of.
You're worried about the battery supply, but LG, they just signed a deal with LG. That should cover.
I know,
all
but
of
the factory's building
Yeah.
50 gigawatts a year, and that's a 10 gigawatt hour capacity thing, and that's going to come on in a couple of years. What's going to solve it for the next 3 months? I mean, I'm sure they're burning off inventory of stuff they pulled forward. But by the way, like I said, I'm not smarter than the Tesla team. I'm sure they're figuring this out. It's just not clear. I mean, batteries, you can get batteries from China still. You can import them from other areas. They're just going to be 25 to 75% more expensive.
Well, the good news was in the earnings call, they did not call that out as a critical issue that they're working on. So that's felt like to me that they feel like they've got a plan to address it.
It's possible for sure. Again, it's just a risk to think about in the background.
Lots to talk about on autonomy. Let's talk about Elon's strategic moves. This week, Elon made a couple of big announcements, right? Of course, a Samsung deal and then the LG battery deal. These are things that they sign that secures critical supply. One case, AI chips, and the other one is batteries. So, it's just, I love it. Watching, it doesn't move the stock. Nobody seems to think it's a big deal, but it's something that will become a big deal 2 or 3 years later. And that's part of the reason where everybody says with Tesla, right? It's always something in the future. Yeah, wake me up until it happens today. But you have to make these moves now in order for when the future does come, you will see massive improvement. So are these big strategic moves? Elon himself said that Samsung deal he considered to be one of his, very important move. How did you guys see these two things?
Yes, they're huge. The AI6 move with Samsung is a different way to design a computer and to be extremely co-located, to have tremendous autonomy over the factory. And it's a way for Tesla to get as close to a fab. And to, again, it's people think that, there's going to be Tesla people crawling all over the fab to run it and to get parts out for production. That's not the case. Samsung knows how to run production in a fab. TSMC knows how to run production in a fab. Where the value is created is in the co-working DFM world of design for manufacturability and designing a system that's going to yield very well through the fab process, very well through the probe and packaging process, and have shorter process times, better yields. That's what they want to solve together. They don't, right now, Samsung is believed to be behind in sub 4 nanometer node yield, which are these are going to be extremely complex parts to make. But as they're able to shrink these parts, they're able to get better power consumption, better performance, and that's a key thing. So one is it's this co-working relationship to get the market faster, to get a better part. Part yields better in the factory. If it has lower process times, it'll cost less. Okay, and the other thing for Tesla, for Samsung, is they have tremendous redundancy using Tesla and Elon as a customer, because Tesla can say, I want these going into vehicles, I want these going into Optimus bots, and oh, by the way, I'm building my own training infrastructure called Dojo. So if you're Samsung, you love Tesla and you love this deal, and you actually love the co-working, because they're going to buy out all your fab capacity and you don't have to actually worry about it. A lot of people talk about, a lot of customers and OEMs say we'll do this or and they actually don't bring the goods. Like we've seen this happen a bit with Stargate, for example. It kind of got off to a rocky start and how that was funded. And you see other examples of this. So I think it's a very good deal for Samsung. It's a very good deal for Tesla. Finally, this will be one of the first real world devices where the AI computer is fabbed in the United States and married together in a consumer product that you can buy in the United States. Everything else, goes offshore, assemblies offshore, different product offshore. You think how long these supply chain networks are. So everybody's excited about doing silicon fabrication again in the US, especially at this level of complexity. But when you can actually, when it actually has a home, when it can be packaged and then it has a home in the US, that's where I think more of the power comes in.
And it shows, in my view, everything you said is perfect. But I want to add, and it shows how far out Elon is planning and the teams are planning. You know, we're waiting for Grok in the cars. They are like 3 to 5 years ahead, and it's strategic. It's clear. There's a roadmap. They know where they want to go, and here's some proof.
Yeah, when I heard this, I was shocked that this. You know how a deal like this takes months and thousands of hours of work. So both Elon, of course, we thought he was so distracted, not spending enough time. He should have been, like chains on to Tesla. This is the kind of thing that you want your CEO to be working on. And then he also has an executive team or a team that is, competent enough to be able to make this deal happen. You know what I mean? Like, for those of us who've done deals like this consumes your life, right?
It does.
It's like,
and you know how he said it's going to be close to my house, and I was giggling. I was thinking, oh my God, they have no idea yet what's coming. Poor Samsung people. But then there was somebody, I think it was Phil Basil, who wrote something similar, and then Elon replied and said, no, I had them on the phone. I explained to them. I
spoke to the Samsung chairman. Yeah, we figured it out. I mean, he was involved, right? It's like.
By the way, their culture, I mean, that's a difficult culture to outwork. They will step up.
South Korea? Yeah.
Yes. Yeah. I'm very confident that their working styles will be very complementary together.
Oh,
so
complementary?
I don't have any concern. Yes.
Okay.
Some of the hardest working people you'll ever come across in your life.
And this is a challenge they want to win, because they knew they had competition and they were not the front runner. So this is, I think, for Samsung, a really big deal. And I think we should say that, Herbert. I think we should share this. We were this weekend at the X Takeover, and there was an employee of Samsung who approached us. I mean, it was really him coming to us. He was showing us pictures, and he's not working on the Tesla project. He's working on one of the other Musk company projects, but he was very proud that Samsung may be also part of that. So, you saw how proud and committed that person was to spend this weekend at the X Takeover meeting Tesla people, right? I mean, there was no other reason for him to be there. And it shows how much they believe in Elon and his companies.
A deal like this, Tesla, Elon making with Samsung, of course, the Tesla team has so competent to be able to do this. You deserve CEO of the year, just that alone. And then here we are. People thought that he was busy, being distracted by the government, and he was. But boy, he can make things happen. He can make it. I mean, this move that he made with Samsung, from what we've read, obviously is still the high level stuff, but it seems so beneficial to Tesla, right? He got what he wanted. The fab is right close to the Giga Texas. He has the right to come in and make sure that it's successful. He gets the sole production of all the chips is going to be given to Tesla. I don't know what else he could have asked for to get what he needed. And I'm sure there's no exclusivity. It's like if he needed to, he can flip them out to TSMC if he somehow doesn't think it's working out.
Well, that would be an involved. I mean, that would be a highly involved process to do
for the next year.
Yeah,
for the next year.
Yeah,
next chip.
They can definitely do it.
Yeah.
Just credit the Tesla supply chain team as well in this. If you look at Tesla through COVID, if you look at how all the other automakers struggled, and you look at how Tesla was able to get supply, sure, they were constrained and costs had to go up. Everybody's costs went up. But Tesla had supply of cars through COVID. They got parts. They figured out how to qualify drop-ins faster. That's a supply chain and engineering thing working together. And there's no doubt in my mind that, the supply chain team on the electronic side here, probably under Karn, spearheaded this effort under Elon's direction to drive the strategic deal with Samsung. So I think he's got a very experienced supply chain team, because when you look at the kind of things that they have to go after, whether it's raw materials, it's rare earths, or it's battery materials, we're going to talk about a battery deal. This team is both working very long term and also working very tactically on the quarter with all these challenges with tariffs and so forth. I just think they have a very experienced, very effective supply chain team.
Okay, that's Elon's strategic moves. Talking about that, maybe you can give us an update, Alexandra, on the shareholder meeting, because last week we mobilized the shareholders to send in their share ownership so that we can submit a XAI proposal, and then pretty quickly Tesla said, "Oh, okay, we got what we needed." Can you just give us a summary of what happened?
Sure. And by the way, Elon just replied to one of my posts, which I think is important as well. We may want to talk about that in a second, but let me do that first. So in the earnings call last Wednesday, Elon said, if there is a shareholder proposal for XAI, we will vote on that and we'll respect whatever vote comes out of it. So that led us to mobilizing. There was a little error in Grok helping me set this up, not only me, but also Amy, with saying that you needed $2,000 of current market value and have held these shares for at least a year. That is an old SEC rule, and it has been updated in 2020. And actually, currently, there are 3 ways of qualifying, of being a person to bring forward these shareholder proposals. One is that you have $2,000 but held them for 3 years. One is that you have $15,000 of market value and have held them for 2 years. Or one is that you have $25,000 of market value and have held them for 1 year. So to all those who have written, thank you for having gotten your bank letter written to Tesla. Tesla started reaching out to some of them already, and will probably reach out to all of those that have sent letters saying you need to amend the bank letter, and you will have 2 weeks to do so, because it's not 2,000 for 1 year, but 2,000 for 3 years, or 25,000 for 1 year, or whatever, whichever of the rules you want to apply. So you will, when you receive that email or that letter from Tesla, you will have 2 weeks to provide the supplementary information. You will also have to confirm whether you can come in person to the shareholder meeting. And your proposal has to be less than 500 words, which it is if you have copied the text we've given you. So all that to say, they are reaching out to different people at the moment. I know that for a fact. And they should reach out to all of us to either amend if that's necessary, or confirm that they have received the letter if it is good enough. So I feel very strongly that this will, in one way or the other, end up in the proxy, and that we were on time because it had to arrive there before the 31st of July. So that is the first thing, and I think we did well on that part. So now,
quick comment. Job done. Well done. Thank you, Alexandra and Amy, for mobilizing us. Thank you for the shareholders who acted quickly. I was very impressed with our YouTube audience. So many of them came and said, I'm doing it. And on your X account, same thing. So it was
great work.
This shows you. Yeah,
I mean,
it was great.
This is the best retail shareholder group ever. I don't think there's anything even halfway comparable. There is no way. So next steps are, we're waiting for the proxy, which is middle of September, between the 12th and the 22nd at one point. Please ensure that you're holding your Tesla stock, not being lent out, in an account with which you can vote beginning of September. I think date of record will be the 8th of September, but better be safe than sorry. So from the 1st to the 12th, just hold it there. Don't go into margin. Don't do anything. Make sure you can vote on it. Check with your banker that it's not lended out, and check that you can vote. There is my pinned post, my newly pinned post has all the instructions, has all the recommendations. You still have time to change of bank or broker now, but it has to happen now. We've got 5 weeks left, not more. And then once we have that, we'll start the voting period between middle of September until the 6th of November, where we will have the shareholder meeting.
Okay. And then before we get off this topic, this allows Tesla to now include in the proxy the question of whether or not Tesla should invest in XAI. I think what we'll do, Alexandra, is we'll do another show where we will explain whether or not, what's the benefits? Should we say yes? Should we say no? We can have pros and cons. We can bring in other people who don't think that's a good idea, and we can listen to the arguments on both sides. should Tesla invest in XAI, and what's the real benefit and so forth. Yeah, let's do
Yeah,
that.
and then let me maybe quickly address that Elon just replied to a post of mine. It was actually started off by John from Tesla Owner Silicon Valley, where he had a chart saying Elon has 21.2% of Tesla, which is not true. And I replied to that and said that's a bit misleading until we know from the Delaware Supreme Court. As of now, Elon holds 12.8% of Tesla, which makes about 410 million shares. And there I put in brackets, again from Grok. I have to learn to less trust Grok, but there we are. I put in brackets, he had pledged more than half of these shares as collateral for personal loans up to 3.5 billion. That was true. I think it was in the last 10K. Okay, so this is a bit outdated. And then I continue saying, additionally, Elon has options to purchase around 304 million shares from that 2018 compensation package, which, if exercised, could increase his stake to approximately 20.5%, though these options are currently in this legal dispute and don't give him any voting rights, because I think what John wanted to do is prove who is going to vote. And to this, Elon just replied, just for your information, I don't have personal loans at this time against Tesla stock. So that is a great news. So there is no debt anymore. Then he goes, also, the taxes on the options are around 45%. So net gain in voting is more like 4%. So he doesn't move up from 13 to 20. He moves up from 13 to 17. Okay. It is worrying in that I don't want to build millions of robots and then potentially be ousted by activists and unable to ensure that public safety remains of paramount importance. So this is new to me. I didn't realize that the taxes would eat half of that. I had always had the feeling that the taxes was something that Tesla would take care of, by dilution. But anyway, so that is not the case. So if 2018 goes through, again, we're waiting for the hearing, hopefully in August, September. I hear now also November, which drives me crazy. I mean, Delaware drives me crazy anyway. But anyway, so where are we with Delaware on that 2018 appeal with the Delaware Supreme Court? There will be a hearing, should be end of August, beginning of September, remains to be confirmed. And if that is the date, we should have the verdict by November, December. I strongly believe we will win this, because otherwise for Delaware, this is suicidal as an incorporation state. If the Delaware Supreme Court lets this go and confirms the Chancery Court, I think that's going to be really an issue. But anyway, we'll see when we
Never
get
underestimate the woke mind virus.
That is true. That is true. But I'm still,
They're,
I want to.
They're upset about commercials and jeans right now.
That's true. It's
right,
true.
Herbert?
And wasn't it cute how Tesla reacted with that seat video? That was great. So anyway, all that to say, I feel privileged that you replied, because it wasn't a post from mine. I was replying to another post, so he was really digged into it.
That's news.
He's so precise. That's news, isn't it? And it's good that he doesn't have any loans as collateral anymore. That's great.
And so how did he end it? He goes, okay, he still wants his 25% voting control. He only will have 17%.
Yeah, exactly. So that gives us a very good guideline. So he's at 17. He wants 25. Let's see what this whole thing comes up with. I don't know whether I mentioned already publicly about these Class B shares. So there's currently some discussion about, because, my easiest wish to get him to higher voting rights is giving him a different class of shares. That is possible under Texas law. That is possible within the S&P 500. But then somebody, James from I Cannot Underscore Enough, texted me and said, well, it's not possible under NASDAQ rules. And he's completely right. I hadn't thought of those. NASDAQ rules don't allow you to introduce a second class of shares until while you're NASDAQ listed. So there's ways out of that, to become New York Stock Exchange listed, or to become listed at the Texas new stock exchange that they're setting up. So that could be a way to still get to Class B shares. But it could also be that the lawyers of Tesla said, Class B shares is too complicated. We need to have only Class A shares. And so again, we just have to wait for the proxy. No point really speculating too much about it. But it may not be as easy as I hoped for with those Class B shares.
Okay. And I think that, do you guys agree with me that at the Q2 earnings call, I felt, just listening to what Elon said, that he felt confident that there is a compensation plan, that it's going to, that he's not concerned about his ability to achieve what he wants to achieve. I might have
yeah.
read way into it, but I felt like if he was concerned, he might have said some other things.
And not only that, I mean, he was spitting out $20 trillion company in the days after the earnings call. You know, whenever those posts come, this is not just.
I think I can get the company market cap to hit 20 trillion. It's not, he's not just doing that because he's doing it because that he's been thinking about it. That this is probably his compensation plan is tied to these.
Exactly. That could be the end goal. That's exactly it.
Yeah. I mean, there isn't an alternative. It's almost like this has to be figured out. So yeah, I think he's confident, but he has to keep it out there that like this has to happen. Like there just has to be execution on this. And there's just all this variation that Alexander's talking about and things that could be, that could get in the way of that. But I think there just has to be convergence on it. And he's just reminding us of that.
Yeah, it clearly is. And I felt, and this may be just me being so overly paranoid about anything Tesla, I felt, and it could also be just me not understanding linguistically Wybev, our CFO. So I don't want people to over interpret what I'm saying now. But 2 or 3 times in that earnings call, Wybev was sort of, okay, we talk about that at a later stage, compensation package, XAI investment, a couple of topics, hot topics that are interesting for me. He's sort of, not now. And in all 3 cases, Elon cut him and gave us the answer we were looking for. And so, and I understand. And the one thing that we are all convinced about is Elon is an excellent money manager. He has brought us this far with nearly no debt. He is somebody who will always go the stingy way, pressing the cost structure, making sure there's profitability. He's not somebody that wants to throw money out of the window. But at the moment, there are just such enormous financial needs for R&D and CapEx, and maybe now XAI, and maybe now a compensation package, that if you are CFO, you must feel it. You must where's my money? Keep it here, right? Because that's your role as a CFO. As a CFO, you may see the strategic benefits of 3 things, but you may also say, oh my gosh, do we have money for all 3? Where's the priority? Which of the 3 is more important? You can't have all 3. Well, maybe we can, but you see, and I have the feeling that there is a little bit of tension going on here.
Mm-hmm. Yeah, I think the CFO's job is to talk about Tesla, the company, and the board, and it's actually good that he said what he said. I want the CFO to say those kind of things, and because the general thinking everybody says is the CFO is working for Elon, and he'll do whatever Elon is, and he's doing this, and I'm like, no. I do believe there is much more noise in the background than we hear about, which is good. We shouldn't hear about it. Good, yeah. But this call, if you reanalyze it, and I've read it now 3 or 4 times, I really have the feeling Wybev is like, oh, okay. Now you're coming with that now. XAI, okay, you want more R&D and more CapEx, and you want the compensation package. And if you are the one holding the key for the safe, you're sweating. You're like, I don't want all 3. You want this, you want priorities and some stuff that can be delayed in this whole thing. And I just don't think he's winning that war at the moment, but he's fighting it. Which is good. I agree with you. Yeah. Right. Which is, again, I think good. Okay. Quick fire questions, guys. So very quick. Answer it. Cybercab, when, what, where? Jeff, you kick off. Come on.
I think, they'll be building them in the first half of next year. I think they'll build a couple hundred or 1,000 maybe, at the end of this year. Wouldn't be surprised a couple hundred get built at the end of this year.
Couple 100 and 1,000 possibly by the end of this year.
I said a couple hundred or 1,000 maybe by the end of the year. It wouldn't be out of this world. I'm not saying they're in start of production, by the way. I'm not claiming that, but I think the volume production first half of next year, that's when you would be able to answer that question, see it in volume first half of next year.
Do you think they will be sold? Do you think they will be sold to the public?
That's a good question. I think there's going to be yes, I think eventually they will, but I think there will be this allocation. I think Tesla is going to turn into this business of doing build to order, build to inventory, and then build to Robotaxi. demand. I think they're going to have another demand lever that they're going to have to feed.
I mean, if that is true, if it's sold, I want one for my 60th birthday. My 60th birthday is on the 22nd of May next year. And I'm nailing it here that I want
No,
one.
I don't want you to get it, Alexandra. As much as I want to wish you happy birthday, all of the cars they make in Cybercab should, for the next year or two, go all to robotaxis.
True.
Come on.
It's true.
And
I get no bot, no car. What's this all about?
I mean, you get the original prototype, maybe, but I
So
mean,
you can't have one.
So
Exactly.
yeah, no,
Gotcha.
one is okay. Maybe
Why
for
do you have
you,
to act like an
Alexandra,
Herbert?
I'm the CFO.
It's her birthday.
I mean, yeah.
Herbert, you said
the
I could have a
lucrative,
present
how
for you.
What a
lucrative
party
this is for
pooper.
Tesla shareholders.
One Cybercab. One Cybercab.
You should have
he acts
seen
like
this
he's
weekend,
running the
Jeff.
entire company.
Jeff, you should have seen this weekend. The whole weekend it was, am I more famous than Alexandra? Can you please? He asked people, he ran up to people and asked them, do you think
Oh,
I'm
come
more
on.
famous than
At least I was like kind of in the running. But okay,
It's not
so
surprising.
Cybercabs, Lars Moravi did come out and say that Cybercabs, I mean, you got to parse his words, but in the X Takeover interview, he kind of said that Cybercabs launching this year, what does that mean, Jeff? Launching this year, right? Means that it's probably going to be on the road, at least, like I said, a handful of them. And I think in a previous interview, he said that there might be a handful of them in California. So
If they start production, you'll see them. They'll be out testing. I'm just not trying to get ahead of anything. I think the volume production, many Cybercabs is first half of
and
next
it won't
year.
be California, by the way, because it doesn't have steering wheel and pedals. So you can't do supervised. So it can only be a couple of them in Austin if they pull off.
Well, other
You
states
can have
too.
a safe. You can still have a safety monitor. Yeah. So I think there will be a handful of them, just to get it out.
It's supposed to be rapid fire.
I know. Sorry. Stock price 2026 end of year.
I don't like
600.
these.
Okay. Sorry, John.
It's next year.
Yeah, that's what I
end
said.
of year.
Next year. I'm giving you an out. I'm not saying this year. I'm saying next year. So at least
Yeah.
600 is what you're thinking, meaning to say it should at least at that point double. Okay. Now none of us here like to do stock price. We don't do that. So that's fine. You don't have to answer.
You just ask
I
us
hear.
every show.
I know. Why new Gigafactory, Jeff? Why haven't we heard it? I know you're going to share
Why?
with us this capacity, right?
Exactly.
But how
Exactly.
the existing
Why do
factories
people
have
Why do
capacity.
people want to dig holes in grounds constantly? Why do people want to do
Yeah.
that?
What do you
Get
mean?
more.
I mean-
Yeah,
get
so there's
more
enough
utilization
capacity with
out
the
of your-
existing factory
By
for when
far,
the
and
next.
there is enough
factory.
ground around
Yes.
every factory to build them out. Why would you have
Yes.
a new site?
Well,
This is
we're
completely
underutilized
Exactly, for a
most
while.
places.
Yeah.
So the first stage is utilize what you have. The second
Mm-hmm.
stage is get more efficient in what you have so you can do more in there. And then if you need more but I mean, there's going to be a new if somebody wants to see a factory being built, there's a new, Megapack factory in Houston, outside of Houston.
Yeah.
Yeah.
I mean,
they
just
may
2
do-
years
they
ago,
may do
everybody
Megapacks
kept
somewhere
saying
else.
there's going to be a gigafactory in India. There's going to be one, like they were all already like this was kind of maybe the plan that Tesla had. And then so things kind of changed. That's why we're asking the question.
Well, there's a lot going on behind that. So I think there are genuine intentions to expand in certain geographies. It could also be used as leverage if you're trying to expand in an existing geography and say, hey, I can just go in India, or I can expand and do more in China. So I think there's a number of those things going on. But we know Houston Megapack, and then the semi factory is completing over the next couple of months. So you're gonna have a brand new building in Nevada building semi trucks. This is unbelievable.
What were you saying, Alexandra?
No, nothing on top of that. But why would you now invest in another factory? It's just not the moment. You have underutilization everywhere. You are now changing car models. So if we get those car models into all 4 factories working, stamping them out as quickly as possible, that's wonderful. You're not going to put capacity into building a 5th gigafactory. And the other thing is, if really you are now at capacity, all except for Fremont have enough grounds around to go bigger. So if really you need, it's much easier to expand the current sites where you have the whole supply chains, where you have everything ready, then go somewhere else. I just don't think there's any necessity that I can see coming. Now, you tell me 2030 and they're stamping on 20,000 cybercaps, there may be a need for, I mean, what was supposed to be the rhythm at which he stamps out those cars? Every how many seconds?
5 seconds.
Yeah.
Yeah.
Quick
So if
rate.
that is true, probably you don't even need another gigafactory.
I've got the best answer to the question, I think.
Oh, there you
Okay.
go. So actually,
Tell me
you're like a
tell me if I'm wrong.
3-year-old who asked the question because you know the answer.
I got the best answer ready to go. The best answer is that instead of gigafactories, in addition to megapack factories, they need to be building AI data centers. And guess what? Big giant buildings being built. Colossus 2 is being built. Cortex 2 is being built next to Gigatexas. So that is the factories we should be watching out for. There should be more of those kind of factories. And that tells you the difference between car company, AI company.
Okay, so you see what he did here, Jeff? He asked a completely different question.
What?
So that we
Yeah.
He asked a
Gotcha.
question about gigafactories.
Exactly. Yeah. And then he puts his thing as if he's the smartest.
Come on, it's a good answer. It's a good answer.
Yeah.
All right.
To a different question.
You guys are awesome. The best panel here. Thank you so much, Alexandra. The work you did last week, and we're going to need to rely on you as September comes with a proxy annual shareholder meeting. This is the most critical, consequential year. Elon Musk needs to get his compensation package. Once we hear his new plan, we're off to the races again. Thank you, Jeff. Appreciate you coming in, of course. And as always, the best. Thank you both. Thanks, everybody.
Thank you, Herbert.
Thank you, Herbert.
I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.